Dear ladies and gentlemen, dear colleagues, it is my pleasure to have Mr. Herreman with us for today's workshop on TIPS clone. On the outset, I would really like to thank you all for yesterday's success. We finalized the new payment hours in line with our objective without any impediments or bugs, hiccups. So in that aspect, I think that we are really closing the gap when it comes to EU standards in payments very, very fast. As you have already annotated from the press and, of course, from the presentation that your CEOs had in July of this year, the next stop is 20th of October, when we will start with the work of our national payment system over the weekends and public holidays. So in that aspect, all these changes are, I would say, an intro to what is gonna be the final result, i.e. implementation of the TIPS clone. In that aspect, the main aim of today's workshop is really to get very close and very operational data when it comes to the requirements of the banks who are striving to join to TIPS clone, to, I would say, highlight the elements of SET instant scheme that will be a bone back for the implementation of TIPS clone. And in that regard, I would say that there is no better person who is available, I would say, at the EU market than Mr. Herreman. So we are very lucky to have him today. And I really look forward to the very, very fruitful and interactive cooperation during the day. Maybe just to start with the first slide that I will try to explain, in fact, explain the position of the regulator, why we are doing these changes and why with this pace. Namely, the main aim of the regulator, i.e. of the Central Bank of Montenegro, is to assure that by the end of 2026, our customers have EU-like experience when it comes to payments. You are very much aware that in the matter of few weeks, we will be operationally ready and fully integrated into SEPA. However, that is just the first step. When it comes to domestic payments, we are aiming to close in a big transformation when it comes to implementation of TIPS clone. TIPS clone would provide us, on one hand, a very, very good test for tomorrow's original TIPS, hopefully that we're going to get in 2028. So in that aspect, the Central Bank of Montenegro, I would say, created a strategy based on 3 layers. The first layer was to finalize EU acquis in the area of payments, which has happened at the end of 2024. The second layer is to create infrastructure which is very, very similar to those within the European market, both when it comes to cross-border payments and domestic payments. And that is precisely what we are doing with SEPA and TIPS clone. The third layer relates to, I would say, our overarching strategy of, I would say, aiming toward cashless industry and cashless society. I believe you all saw the Findex of the World Bank, where there is an obvious gap between the payments within Montenegro and those in the EU countries. To this end, with TIPS clone, what we are aiming is to, I would say, accelerate bankability in our market. There is a room of more than 70,000 new accounts to be opened. In addition to that, we need to close the gap, especially when it comes to number of women who are having open accounts. Similarly to that, one can estimate based on our inputs as a regulator that together SEPA and TIPS clone will contribute to Montenegrin economy by improvement of its competitiveness by, I would say, staggering 160 million euros, i.e. 2.3% of GDP when it comes to our estimate of GDP in 2023. What that means when it comes to closure of the income gap between Montenegrin income and those of the average in the EU. That means that over the course of 10 years, solely with these two changes related to TIPS clone and SEPA membership, we can add to the closure of this gap by more than 10 percentage points. I believe that there is, I would say, certain pressure on us as a banking system and as a regulator of the banking system to accelerate those reforms. So apologies if we are overly ambitious, but we believe that this stage approach is, I would say, more beneficial than big bang approach should we don't make any changes and then suddenly in 2028 over the night would need to make all the changes that we are making it now. On our end, we can tell that you will always have a supporting hand and trusted advisor, and that through this process you will definitely not be alone, and that you can count on our assistance and transparency at all in all areas and in all stages of the implementation of this important project. So apologies for giving this, I would say, a rather comprehensive strategic overview, but I really wanted to highlight why we, I would say, suddenly put, I would say, a lot of effort and pressure to the part of the banking system related to the payments. However, I truly believe that the final goal, i.e. EU-like payment experience for Montenegrin citizens by the end of 2026 is something that is attainable, and I would say that much of the success will depend on you. So once more, I really hope for a very, very interactive presentation, and please don't be shy to ask questions. And I hope that by the end of today's session, we will have much more knowledge when it comes to, I would say, implementation of TIPS clone and have better idea on the timelines for its implementation. Thank you so much.
A lot of familiar faces from the SEPA project, some new ones as well. So thank you very much for having me over and to share some insights into instant payments. So today, we'll be looking at instant payments. I'll give a little bit of an introduction to what instant payments are first. Then we'll look at the instant payment scheme and dive a little bit into what the instant payment scheme exactly is and how it works. And then we'll finish by looking at what it actually means to implement instant payments for a bank. We've had the opportunity to support a number of banks in their instant payments implementations throughout Europe. So I'll share some of those lessons learned with you and things that you need to take into account when it comes to your IT, organization, and so on and so forth. So, as you know, TIPS clone, it's operated by the Bank of Italy, the Banca d'Italia. They are the technical provider and the operator of the TIPS clone. However, the Central Bank of Montenegro is the business operator, and they are the regulator for the participants. You, the credit institutions, are of course the participants to the system, and the technology provided is based on TIPS. So TIPS is Target Instant Payment System, right? Which is the instant payment system operated by the European Central Bank. Okay, so in the European Central Bank, there are basically 3 different clearing settlement mechanisms. We have Target 2 for high value payments that you might be familiar with, T2S for securities, and then TIPS for instant payments. So the good news is, as the Vice Governor said, this is a project that integrates us into Europe. Of course, this isn't the TIPS, in ECB. We won't be able to reach other banks in Europe. It'll be a domestic solution. However, it will be very, very, very similar to the ECB version of TIPS. So if and when we integrate into the European Union, transitioning to the EU version of TIPS will be a very smooth process. There are 4 countries that are participating in this TIPS clone project, being Albania, Bosnia and Herzegovina, Kosovo, and Montenegro. And then North Macedonia has joined as an observer. For now, I believe they're implementing their own instant payment system separate from TIPS. And of course, the ECB Governing Council has approved the project. So before we dive into it, some of you might be familiar with me, some of you not. So my name is Kjeld Herreman. I'm one of the founding partners of Payloom. We're a consulting firm specialized in payments and fraud prevention. And some of the background that I'll be sharing is really from having implemented instant payments in a number of European banks. And we've had the opportunity to support many of you with your SEPA projects, and glad to hear that that's going well and that we're starting to do the testing now. And hopefully this is the start to the next journey on instant payments. So, what are instant payments? Instant payments are based on a scheme of the European Payments Council, right? So it's an EPC scheme that was developed in 2017, went live in 2018. The idea behind instant payments is that, well, it's in the word, right? Instant. Within 10 seconds, the money is with the beneficiary, and we have that certainty. Why is that important? What's interesting about these faster payments? Because now, we have real-time clearing. It's within a few minutes or a few hours, right? It's just about real-time, but it's not 10 seconds. Why is this 10 seconds so important? Well, because 10 seconds, it allows us to use these payments for other use cases. Today, we don't use account-to-account payments when it comes to e-commerce. We wouldn't think of using a transfer to pay in a store. However, with instant payments, we now have a backbone that can be used for these new use cases. And we see that starting to develop throughout Europe. Right? So a lot of it is supported by mobile wallets. Think of Wero in Belgium, France, Germany, and so on and so forth. In Poland, there's the Blick system. In the south of Europe, Bizum is incredibly successful in Spain. These are systems that use QR codes and proxies and things like that to be able to use instant payments at a point of sales. So I think the Vice Governor mentioned that this is somewhat of a compliance project as well to be integrated into European standards. But I do think it's important to understand as well that this is an opportunity. Right? It's an opportunity to insource some of the activities that are today being done by, for example, card networks that allow you to get a greater share of the profits that are being made in merchant payments. Right? So there is really a business case for this as well. So 10 seconds, they're fast, right? Very fast. And the core difference here between this and, let's say, an RTGS payment is instant in the interbank space. This also includes that instantness when it comes to the payment service users. And then the last part is not to be underestimated, 24/7 availability. They are available at all times of the day, on bank holidays, on weekends, so we can do an instant payment at any time. And this operationally has actually almost as much impact as the fact as that they're instant. Instant payments are very much becoming the norm in Europe. So we see that the first ones went live in 2018. The first challenger banks, or the first banks started to go live with it. And those volumes have continued to increase. Today, we're at about 25%, actually slightly over now, if we look at the very latest statistics. And in Europe, we have to take into account that there's a new regulation as well, which doesn't apply here in Montenegro, but we have the instant payments regulation. So actually in Europe, it is mandatory today for all banks to be able to receive instant payments. And as of October of this year, it will be mandatory for all banks to be able to send instant payments as well. And banks in Europe or in the SEPA, in the European Economic Area, are not allowed to charge a premium for an instant payment compared to a regular domestic payment. We can charge, of course, premiums for other things such as the value-added services, right? These QR code proxies, mobile wallets, that's where we get the profitability, not so much on the payment itself. So it's not just the banks here in Montenegro that are busy with instant payments, it's also all of the other banks in Europe that are busy implementing instant payments at this time. So, I talked a little bit about Europe, but I think it's important that we make that distinction between Tipsklone and European instant payments. Because as Montenegrin banks, you can actually do both, but they're two distinct things, right? Because Montenegro is now part of SEPA, you are also capable of joining the European Payments Council Instant Payment Scheme, which would be, settled either on TIPS or RT1 or some other market infrastructure. Of course, much like with SEPA, you'd have to be an indirect participant to be able to do that. But you can be an ECB, you can be member of EU instant payments. When we're talking about Tipsklone, it's different. It's purely domestic. And the Tipsklone is largely based off of the EPC scheme, but it is not the EPC scheme. Right? If we think about the European Payments Council scheme, one of the requirements, for example, is that you have to be able to process transactions throughout the SEPA zone as if they were domestic, which is not the case here. So, two different things that we're doing. The first one is for domestic transactions. That's Tipsklone. That's what we'll be talking about today. But be aware that it's going to be 99% the same as the EU version of instant payments. So you could also consider leveraging that infrastructure that you build to do instant payments in Montenegro. You could also consider to use that in the EU context to integrate into SEPA instant payments. Another scheme that we have today is verification of payee. It's also becoming mandatory for EEA banks to implement verification of payee, which is a tool to allow the alignment between the payers, what they enter as the beneficiary, and the actual beneficiary name that's known by the beneficiary's bank. It's also an obligation for EU banks. However, in Montenegro, we cannot yet join the verification of payee scheme. There's still no full alignment on GDPR, on the data privacy regulation, so that's why banks in Montenegro, but also in the UK and Switzerland, cannot yet join the verification of payee scheme. So that's something to take into account. Any questions about kind of EU versus Montenegro? Is that clear to everyone? Yeah.
Excuse me.
Yeah.
For other countries, Kosovo, Bosnia, it will be only also domestic payments for that countries.
Yes, so Tipsklone is purely domestic. Now, I think there is an ambition to build interoperability between these schemes as well, but that's phase 2, right? And it becomes more challenging as well, because if we think about interoperable instant payments, well, Kosovo should be relatively straightforward, but in the other countries where we have other currencies, there's an FX element associated to that. And doing FX at 3 o'clock in the morning on a Saturday can be difficult. So that's phase 2, right? Also with value-added services, this is something that the central bank is exploring, right? So value-added services, that means QR codes, proxy payments, things like that. It is something that's being explored, but today we'll focus on this phase 1, which is just our domestic instant payment system. Thank you for your question. Any other questions? All right. So let's start with where we can find some documentation on instant payments. Where can we find it? Well, we still have to define the scheme that we will be using in Montenegro, but you can assume that it will be 99% the same as the EPC scheme. So the Tipsklone rulebook will be largely aligned to the EPC's SEPA instant rulebook. You can assume it'll be 99% the same. For those of you that have done a SEPA project, some of these slides might be familiar. So what's a payment scheme? A payment scheme, it's a set of interbank rules, practices, and standards to achieve interoperability for the provision and operation of different SEPA payment instruments, including instant payments, right? schemes in the EPC have adherence, and that adherence is managed by the European Payments Council. I don't think we've made a decision at the central bank level yet whether the central bank will be the operator of the scheme, and if there will be some type of registration process for that scheme. But you can assume that it'll be largely similar. It'll be seen as kind of like a multilateral contract between the banks that we will process payments in this standardized way. So the schemes are documented on the website of the EPC. Again, the adherence agreement, so you've done your adherence agreements and your legal opinion for SEPA payments. You will not need to do that for TIPS clone, because again, not the EPC scheme, unless you want to be part of the SEPA instant payment scheme. The schemes are described in the rule books. So you'll see that there's also a rule book for instant payments. It's very similar to the one that we have for SEPA. There's also implementation guidelines, which are more technical, right, which describe the exact messages. We have some guidance documents and clarification papers as well. Many of these are shared with SEPA. Things like structured and hybrid addresses and whatnot. Again, these same type of documents also apply to instant payments. So, what do we find in a payment scheme rules? Well, basically, the contents of the rule book are always structured with the vision, objectives, and scope of the scheme, the roles of the different actors who are involved in the scheme, the business model, so what are the different flows that are happening, what's the operational model, so what are the data sets and the attributes, what are the rights and obligations of the participants. And as you know from SEPA as well, there's also a risk management annex. You only receive that risk management annex if you become a member of the scheme, right? So not everyone has access to that. That's not one of the public documents. The rulebook change management. So the rulebook is updated every 2 years normally, right? So every 2 years you will have an update with instant payment. The cadence is the same as with SEPA payments. One of the big differences with SEPA payments is kind of the go live time of these rules as well. With SEPA, again, we make this transition on a Saturday from one version of the rulebook to another. But of course, over the weekend, we don't process regular SEPA payments. Whereas with instant payments, the change of rulebook happens at 3 o'clock in the morning, I believe on a Saturday, from one day to the next. So really, it's at a very precise timestamp that we have to switch over from one rulebook to another. So typically, that publication of the rulebook is always in November, 1 year in advance of the new rulebooks. And that's typically always in November as well, that we have those changes. This year we have that exception where it's in October. That's also linked to that instant payments regulation. Okay. All right. Any questions about payment schemes? So where can you find the instant payment scheme? If you browse to the European Payments Council website, you can go down to SEPA Instant Credit Transfer, and in that you will find the documentation and the rulebook. Right? It's very important to keep in mind that we will be using for TIPS clone the 2025 version as we did for SEPA payments. So make sure that you're not using the current version, but the 2025 version as you start to dive into the schemes. So what do we see in these schemes? We see process flows, right? So this is an example for a SEPA credit transfer, a payment that's happening. Up top, we have the swim lanes. So who are the various actors that are involved? And what are each of the steps that they are taking? Where are they sending data? Where are they receiving data from? And each of these have numbers as well, these processes. Those processes are then also described in the rulebook. So here we see an example of a data set as well, right? So when we send a payment, for example, the inter-PSP payment data set, so this would be a PAX 8. And there we have all the information that maps to the various fields that we have in XML message. And then, of course, we have the attributes, again, also kind of the fields, right? So if we think about the structure of a SEPA payment and an instant payment, They're incredibly similar. They're very, very similar in terms of messages. Right? What are the differences between a SEPA payment and instant payment? Does anyone know what the differences are in terms of the formats? One is the service level, so it's a different payment instrument, and that's indicated in the message. But the big difference is that instant payments are unitary. Instant payments are sent one by one. So with SEPA payments, we typically send a payment file containing multiple payments, batches of payments. With instant payments, we send them one by one, okay? But otherwise, they're very similar, which means that, for example, if an instant payment fails, you can very easily transform that into a regular SEPA payment and have it processed as a SEPA payment, okay? So it's all based on the ISO 20022 standard. Besides the rulebook, we will also find the implementation guidelines. The implementation guidelines consist of two parts: the inter-PSP implementation guidelines. This also contains the XSD, the XML validation rules, if you will, for the various payment messages. And in there we find the documentation of very specific fields, exactly what each field is, how long it is, what the tags are, and so on and so forth, okay? You will also find that the same implementation guidelines, if you will, the same message descriptions on Swift My Standards. Some of you might have used it for your SEPA project. Right? If you go browse to the European Payments Council on Swift's My Standards library, you will also find the instant payment standards on there. I find it more user-friendly than this long, big PDF. What we will also have are the customer to PSP guidelines. Again, these won't apply to all banks. They only apply to you if you have a method for clients to submit multiple payments to you at once, right? So in that case, we need to support the European standards when it comes to instant payment initiation. So here, again, it's a pane1, a payment initiation file that corporates use that's got a specific tag for it to indicate that the client wishes it to be processed as an instant payment. And also there we have the various XSDs. Color codes. So again, like with SEPA, we have three colors that are used in these interbank schemes. We have the red fields, which we are not allowed to use. You will not find any of these red fields in the Montenegrin version. The yellow fields and the white fields are fields that can be used, where yellow ones are mandatory and white ones are optional and can be developed as additional optional services. Where we might see some slight differences between the EPC and the Montenegrin version of instant payments is that we might try to adapt some usage rules when it comes to these yellow or to some white fields. Right, if we think about domestic payments today, there's some references, certainly when it comes to government payments, that don't necessarily map into SEPA payments, but we can create some usage rules as well to be able to also address those use cases. So that's where I anticipate that we might see some slight differences. Maybe not immediately, but in the longer run, there we might get a slight deviation from the EPC. Nothing major. So, the notation conventions, you see it here, right? So, you can browse through the various XML elements. We see the multiplicity, so minimum and maximum number of elements. And we see the specific description of that element, including any constraints, as well as any usage rules in that fourth column. Again, I think many people who did SEPA payments, so you should be familiar with this as well. There's something else that's different between SEPA and instant payments when it comes to the usage guidelines and when it comes to TIPS clone. Right? When we were doing SEPA payments, what was the documentation that was relevant to us? Well, it was only the EPC rulebook and potentially your correspondent bank had some additional constraints that they might have given, right? Some additional specifications. When it comes to the TIPS specifications, we actually have two different types of messages, because we have our payments-related messages, which are our payments, our rejects, our recalls. Right? These are all managed not by TIPS, but they are managed by the European Payments Council. So again, using the ISO standard, when it comes to the payments messages, that's maintained by the European Payments Council. There's also another document that's relevant to us, and that's the TIP UDFS, User Detailed Functional Specifications. Because there is a whole series of messages that are available on TIPS that are not part of the EPC's remit. Okay? So also here, we can assume that the UDFS for the Montenegrin version of TIPS will be 99% the same as the UDFS for TIPS for the EU TIPS. Right? I think the UDFS are being developed right now. I think the final version is soon that it should be shared, right? I don't know if that's been shared with the banks yet. Do you know?
We shared it with the banks.
You shared it with the banks already. Okay, perfect. So then you can use the version that was shared to you by the central bank. What are the types of messages that we find in these UDFS? Well, some of the things that we'll see is, for example, liquidity transfers. So if we want to do instant payments, we have to fund our account that we have on TIPS clone. So we have to transfer liquidity from our RTGS account to our instant payments account, or we can defund. And there's all of these other these messages which allow you to, for example, see what payments you have in queue that aren't funded. You can get reference data. Is it a banking holiday? All of these types of messages, right? So as you see, there's a lot more messages in these UDFS, and I've even cut out the payments related messages, but there's a whole series of messages here that we don't have in EPC that we don't have with SEPA. Now this is one of the things that you will need to discuss with your vendors and that you will have to figure out yourself. Which messages do you want to implement? Because, and we'll talk about the connectivity solution later this afternoon, when it comes to TIPS, we can interact with TIPS in two ways: in a user to application method or in an application to application. So TIPS clone also has a user interface that allows you to manually do some operations, right? For example, you probably are not very often going to check when business days are and when bank holidays are and things like that. So those are messages that you don't necessarily need to implement, and that if occasionally you do need to consult these type of things, you can do that via the user application, right? So typically the larger the bank is, the more messages that they will implement. And you know, the different vendors have already implemented different messages. But again, for some of these, you might not need them, and you might want to do that manually via the graphical user interface. So don't be scared by this enormous list, right? Think of, for example, account management. We have messages that allow us to open a new account at TIPS. Right? These are things that we're not going to do on a regular basis. So again, don't make a lot of sense to implement for a bank such as yourselves. So UDFS, and they've been shared already. I think the final version is coming out in the coming weeks. Any questions about the UDFS? So, as I said, you really don't need to implement all messages, right? Really think about what makes sense for you, what you need to automate, and what you want to do in an application-to-application mode. And think about what you want to do in a U2A manner. So, let's dive into the instant payment scheme. The instant payment scheme uses a four-corner model. So this is the same as with SEPA payments. In the EPC terminology, we speak of an originator, who is the payer. They have their payment service provider, the originator PSP. And of course, there's the beneficiary and their PSP. Right? There's no correspondence involved in instant payment. It's through the CSM. It's through TIPS clone. So those are the only 4 actors that are involved. And here we see an overview of the interaction and the steps that we take when we process an instant payment. And I'm going to take some time to walk you through this, okay? So the very first step is that the originator will send an instant payment instruction to the originator's PSP. How can we do that? Well, it could be done using messaging, right? If it's a corporate client, they might send us a pane1 XML message. And we have, again, a specific field that allows that corporate to indicate that it's an instant payment. When it comes to retail clients, we've seen in Europe that different banks have made different choices when it comes to instant payments. Basically, there are 2 ways that you can implement it. The first one is to have instant payments be an option. What does that mean? That means I select, I want to do this as an instant payment. I have a toggle where I can select, I want this payment to be faster. Sometimes that is linked to an additional charge. Well, at least until January of this year when it became illegal in Europe. But before, sometimes that was a premium service and the client could select to do a premium type of payment. The other option, and a lot of banks in Europe have implemented this as well, is instant payments by default. So if the counterparty bank is reachable using an instant payment, then automatically the transfer is initiated as an instant payment. Now there's something to be very careful of there, is that instant payments are processed straight through. What does that mean? That means an instant payment either hits the beneficiary account immediately or it gets rejected. There's no manual review of AML controls, there's no manual sanctions reviews, right? There's no manual fraud reviews. So if you do a payment, it gets processed straight through or it doesn't get processed at all. What can be the issue that you can have if you do instant payments by default is that sometimes the payment fails. You might have a client who has a name that resembles to someone that's on a sanctions list, for example, and the beneficiary bank, well, they don't have time to review that transaction manually, so they reject it. You should, if you do instant payments by default, have some type of backup method where rejected transactions can be redirected as a SEPA payment. And again, here we have 2 different flavors. We have some banks that do that automatically. So an instant payment, when it fails, automatically it gets sent as a slower payment afterwards. Some banks make you do that manually. I would strongly recommend the second approach rather than the automatic rerouting as a slower payment. Why is that? Well, because you don't know what your client is doing with their payment, right? Think of 2 scenarios. And I'll take a real example. So I have a consultant in my team who's based in Berlin. He has a Revolut account for his business. And the first time I tried to pay him, the bank thought it was a bit suspicious. They said, oh, kind of high value, Revolut account, going to Berlin, new beneficiary that we haven't seen before, and they rejected it for fraud purposes. So I did a regular SEPA payment, and that went fine afterwards. So in that case, it would have been perfectly fine for my bank to automatically do that as a SEPA payment. But think of another scenario. I'm now at a parking lot, and I'm buying a second-hand bicycle from someone. And I'm there, ready to take the bike. I'll say, oh, I'll send you an instant payment, so you get the money immediately. I do that instant payment, and now my bank redirects it as a regular SEPA payment, so that takes a day to arrive. Now this is problematic, right? Because I'm at the parking lot, and the person that's selling me that bicycle isn't going to give me that bicycle until the money is on their account. And I can't go to the ATM and withdraw money or do a card payment or whatever it might be. I can't use an alternative payment method because the money is already on the way. So when it comes to instant payment, sometimes the instant component of it is just a nice to have. It's convenient, but sometimes it's integral to the use case of your client and their specific needs at that time. So, it's very hard to know exactly what use case your client is using that payment for. So that's why I would recommend not to automatically reroute instant payments as regular SEPA payments, but to leave that choice up to the client. Also, if we think about the EU regulation, it's formulated in such a way that it has to be done a second time. So that's payment initiation. I said I wouldn't say much about value-added services, but one of the value-added services that's become quite popular in a lot of markets, and one that we're also exploring for Montenegro in a phase 2, is a proxy-based payment initiation, right? So in a lot of markets that have mobile wallets, you can connect your banking app to your contact list. And that way your banking app has all of the phone numbers of your contacts. And banks have, or these mobile wallets have schemes that allow you to link an IBAN, to link an account number to a phone number. So that way I can send payments to everyone in my phone contact list without having to know their IBAN or anything like that. So it's quite a convenient way of doing payments. And if we look at the data from the World Bank, looking at the adoption of instant payments around the world, in markets that have these type of services, that adoption goes much faster. So the instruction, of course, requires authorization. So PSD2, we need to have strong customer authentication. What are we going to do? Well, the originator PSP, they have to perform all of the processing. So that means they have to check if there's balance, and they will place a reservation on the account. So with an instant payment, we don't debit the client's account, we reserve the funds on the client's account, okay? It's the time that the client authorizes the payment. So the very moment that you receive that strong customer authentication, that's when the clock starts ticking. This is a change from the current rulebook. Today, it only starts when the originator PSP sends the payment out. Under the new rulebook, so the one that you'll be implemented, the clock starts ticking the moment that the client authorizes the payment. Of course, it's very important that that timestamp is correct, so make sure that your systems have the correct, very accurate time. We're talking about milliseconds difference here. For the banks that have implemented payment initiation files, so pane 1, there's a specific tag that clients can indicate that they want the payment to be instant. We will find that under the payment type information. So what do we do when we process an instant payment? Well, the first thing is we're going to get that authorization for that transaction, right? We apply strong customer authentication in the mobile app or in the online banking or whatever it might be, and we verify that. We're going to verify that the format is correct in the case it's a file. We're also going to check if it's not a duplicate payment, right? So we check that it's not a double payment. If you've implemented verification of payee, there's some additional processing steps, but again, that doesn't apply to the Montenegrin market yet. That's why I put it in brackets. Sometimes we'll need to do enrichment. So we have to figure out what the BIC is of the beneficiary bank based on the IBAN. We have to figure out the routing logic. Now again, with TIPS clone, that'll be straightforward, right? There's only a single market infrastructure for TIPS clone, so you'll send that to TIPS clone. You might need to repair payments. Typically with instant payments, not so much. You will see if there's sufficient balance. You will make a reservation. You'll do your various financial crime compliance checks. So that could be for fraud, anti-money laundering, or sanctions. And we'll dive into each of those things a little bit later. And then finally, you send the message onto the market infrastructure. Okay? So you send the payment using a PAX8 to TIPS clone. So important here, what we don't see here is debiting the client. We've only reserved the funds. So again, the timing, with instant payments, it starts immediately when we apply that strong customer authentication. There are also some SCA exempt transactions. These are, for example, payments that are coming in through secure corporate channels or trusted beneficiaries, for example. With there, the time starts as soon as we debulk a payment. And this is the big challenge that banks in Europe are now facing. So as you are designing your systems, take into account that likely you will have to implement the instant payments regulation a little bit further down the line. So you already want to anticipate this. Because what's happening in Europe? Well, the European regulators have made it mandatory for all banks to enable their clients to instruct instant payments on all payment channels. And that includes file-based payment channels. In combination with that, banks can no longer charge a premium for instant payments. So what does that mean? That means a corporate, they only have to change one parameter in their payment file, and now these payments that were typically taking a day to be processed, they get processed immediately. So for the corporate, it's a big win. But this is, of course, a challenge for banks, right? Because let's say you get a payment file with a large corporate that's paying 10,000 salary payments at the end of the month, all as instant payments. Well, you need a lot of capability to process all of those transactions within 10 seconds, right? So as you design your systems, you know, I never used to do a lot of consulting in cards. I've more been an account-to-account payments consultant. The first time I heard the term transactions per second was last year. It used to be a card thing. How many transactions per second can you process, can your systems process? With instant payments, all the banks, it's what they're worried about. How many transactions per second can we process, especially in light of these type of payments, right? You might think, you know, retail bank, we don't have any corporate customers, not our problem, not our issue. We don't have corporate customers. However, even for retail banks that don't have corporate customers, this is a problem. Let's say you're just a retail bank, no corporates. How many policemen are there at your bank? Right? And if all of those policemen, they get paid at exactly the same time, because whoever the police is banking with, they do their salary payments as instant payments, well then your clients, even though the retail clients, are all getting instant payments at the same time. Right, so design this into your systems and think about the way that it is going to need to be scalable in the future. So we do have some buffering that is possible within the instant payments regulation as well. So if you get a payment file that contains a lot of different payments, you can send them one by one to the market infrastructure, right? And it's only once you're done debulking that that transaction processing time starts, okay? So this is something important also for the larger banks that have corporate clients. Think about throttling and think about intelligent throttling as well. What does that mean? That means you might want to be able to configure, I know this bank can do this many transactions per second, another bank this many transactions per second, another bank this many. Right? So where you can configure potentially even per BIC how many transactions per second you send. Because what happens if you send too many and the beneficiary bank isn't capable of processing them, they time out and those transactions fail and you cause a headache for your clients. So intelligent throttling is something for the larger banks to look at as well. Any questions about instant payments, payment initiation before we move on? No? So the originator PSP, they've done their processing and they send the payment on to the market infrastructure, to TIPS clone. So reserve the funds and sends the payment onto TIPS clone. TIPS clone will not yet debit your account. TIPS clone will verify that there is sufficient funds on your account as bank, and they will put a reservation on those funds, but they have not yet debited the account. The PAX 8 is then sent on towards the beneficiary bank. So PAX 8, again, a payment message that we're using. Another thing to take into account, much like with cross-border payments as well as with SEPA payments, we have this rule book change with structured addresses. as of the new rulebook, we can introduce hybrid addresses. We can use hybrid addresses. So today, only structured and unstructured. We introduce hybrid with the new rulebook, so TIPS clone will support hybrid addresses. When it comes to the addresses of the beneficiary, the payer and the beneficiary, after the 22nd of November 2026, it will no longer support unstructured addresses. Okay. Now, since these are domestic payments, I'm not sure if addresses are required for domestic payments in Montenegro. Can anyone tell me if that's the case? If you do a regular payment to someone in Montenegro, do you need the beneficiary's address? No? Okay. So again, that's one of the differences with SEPA payments, right? You don't need addresses for these instant payments. It's in line with your domestic payments regulation. With SEPA, you only need it because you're not part of the EU. That's why you need the addresses in there. With TIPS, you don't necessarily need addresses. So, the market infrastructure in the clearing function of the CSM, they will reserve the funds, verify that the beneficiary is reachable, and so on and so forth. And they then send that instant payment on towards the beneficiary's PSP. The beneficiary PSP, they know they have settlement certainty, right? So if the market infrastructure sends you a payment, you don't yet have the money. Your account hasn't been credited yet, but you can be sure that those funds are reserved and you will receive the payment if you confirm it, okay? So again, this is different than with, let's say, SEPA payments or your national payments or an RTGS payment today. Today, if you receive an RTGS payment or a low value payment, you've received the funds on your account already, right? Here, you haven't received the funds yet. But you do have that certainty. At that point, the beneficiary PSP starts processing it, and they verify if they can apply that SEPA instant payment towards the beneficiary. So, does the beneficiary account exist? They will go through their FCC checks. Is that beneficiary account capable of receiving instant payments? And so on and so forth. Right? So they do all their checks, and they then have to respond to the market infrastructure. Yes, this payment is okay. I can credit the beneficiary. Or, no, the payment is not okay. Reject. Right? We haven't yet credited the beneficiary, but we confirm to the market infrastructure, yes, this transaction is okay. It hasn't timed out yet. The beneficiary account is okay. I confirm the transaction. The market infrastructure receives that confirmation from the beneficiary bank. They receive that confirmation message. So this is something new, right? This is what we don't have with SEPA. This is one of the key differences between the regular SEPA scheme and an instant payment scheme, is that we get that confirmation message. And it is based on that confirmation message that the CSM will perform the settlement function. So the confirmation message is sent using a PAX2, a payment status report. So when the market infrastructure receives an accepted transaction, in that case, they will do the settlement. So only at that point, if the beneficiary bank has confirmed the transaction, will TIPS clone credit the account of the beneficiary's bank and debit the account of the receiver's bank. If the beneficiary bank rejects the transaction, in that case, TIPS clone will unblock the reservation on the payer's account and send the rejection on to the payer's bank. Okay? So settlement is only happening based on this confirmation message. And that's the settlement function of the CSM. So, negative confirmation, the CSM sends that rejection on to the originator PSP. Positive confirmation, the beneficiary is credited. And on top of that, Going on to the next one. The clearing sends a notification. They send a confirmation message to the beneficiary PSP. And it's based on this notification confirmation, that the beneficiary's PSP credits the beneficiary. So why is that? Well, because instant payments time out. So if the beneficiary PSP says, yes, this is fine, I can do that transaction, and they send the confirmation onto the market infrastructure, remember it's only based on that message that the market infrastructure will settle the transaction. Well, if that message isn't received by the market infrastructure, by TIPS-Clone on time, TIPS-Clone, they've already timed out the transaction and removed the reservation. So it's possible due to latencies, network latencies, that the information doesn't get to the market infrastructure on time, which is why it's technically possible that you send a confirmation to the market infrastructure, say, yes, I can credit the beneficiary, but that the market infrastructure doesn't actually settle that transaction. So that's why you don't credit the beneficiary yet. You wait for the notification or the confirmation message from the market infrastructure to credit your beneficiary. Once you've received this notification, then you know the funds are on my account at TIPS. This transaction has been settled. Yeah? All good? Fantastic. And then we make the funds instantly available to the beneficiary. So, what does that mean? That means the beneficiary has to be able to reuse those funds instantly. We also apply good value, right? So the value date is the moment that we've received those funds as well. Instantly available, that means the client needs to be able to use those funds to do a new transaction, whether that's another instant payment or whether it's a book transfer, right? Instantly available, it doesn't mean just, you will receive funds on your account by the next business day. We confirm that. It means the funds can be reused. What's not part of the EPC scheme and not a requirement, but very much a best practice, is also to send a notification to the beneficiary that they've received funds. Okay? So there it depends on the type of customer that we have. If we have a corporate customer, we would typically do that via a credit advice. So that would be an MT910 or a CAMT54. When it comes to retail clients, oftentimes it's a notification that you get on the app. Some banks think about SMS and email and things like that, right? We'll talk about fraud a little bit later, but instant payments are relatively fraud sensitive. And it's better to get clients used to the idea that they don't get emails from you, they don't get SMSs from you. Everything happens within the app, if possible. It's typically more secure than via SMS. So notifications is what I would recommend. So the market infrastructure, they've now cleared and settled the transaction, and they send the confirmation message, which is a payment status report, to the originator PSP. And at that point, the originator PSP knows whether the transaction was successful, yes or no. So there's a couple of different outcomes, right? Transaction successful or not successful. If the transaction was successful, the originator PSP has to inform the payer's PSP instantly if the transaction was successful or not, right? If the transaction was unsuccessful, we lift the reservation. So immediately you have to lift the reservation, okay? Instantly notify the beneficiary, instantly notify the originator. This, again, for the banks that have corporate clients, is one where there's a lot of debate, where there's a little bit of a gray zone today. Why? Because typically when a client initiates a payment using a payment file, let's say that payment file contains 5,000 transactions, the client would actually typically prefer to receive a payment status report for each of those 5,000 transactions kind of together in one payment status report, right? However, if you strictly follow the rules, it says instantly. Well, you get the status if you instantly send the result back to the client. You know, you have to send them all one by one, or you can't send a payment status report with all of the 5,000 transactions. So there's a significant difference between kind of following the law exactly by the letter and taking a little bit of leniency and waiting for consolidated status. You know, typically the difference is only a couple of seconds due to throttling. But again, I would advise make a judgment call there and make a bulk payment status report. And then finally, this is where it gets really difficult with the new rule book. It's timeout. If you haven't received a response from TIPS clone within 10 seconds, under the instant payments regulation, you have to restore the state of the payment account to the way it was before the transaction happened. So basically that means you lift the reservation. Now what's the problem? Well, you haven't yet received confirmation from the CSM, so you don't know if the transaction was successful or not. But under the instant payments regulation, you're legally obliged to lift the reservation. What does that mean? That means potentially the transaction was successful and the money is with the beneficiary, but you've now lifted the reservation from the payer. This is one of the big challenges that the EPC is facing, one of the huge risks with the instant payments regulation, because if we follow this and if there is a technical issue, potentially the money is in two places at once. So there is settlement risk for the payer. Okay. In Montenegro, you're not yet subjected to the instant payments regulation. I would advise not to implement that part until as late as you can. Right? So if you don't receive a confirmation message, you have to, again, return this status to the account that it was. So let's talk about timings a little bit in this whole flow, right? And then we'll take a break. Instant payments, 10 seconds, but it's 10 seconds end to end. Right? This is a big change from the current rulebook to the rulebook that you'll be implementing as of 2025. Today, the 10 seconds starts when the originator PSP sends the transaction to the market infrastructure, so they put their timestamp at the very end of their processing, and the 10 seconds end when the beneficiary PSP has responded to the market infrastructure. Today, so it's steps 2, 3, and 4, that's within 10 seconds today. As of October, it's when the originator PSP is processed to the market infrastructure, to the beneficiary bank, and back to the originator PSP, and their processing as well, all within 10 seconds. So the timeouts are very different under the new rulebook than they are with the old one, and they're much tighter. So what does that mean? Basically, we've transitioned to a 5-7-9 second model. Okay. So the originator PSP, they have to, put the timestamp immediately. The beneficiary PSP, they have to be able to send the confirmation message to the market infrastructure within not 10, but within 5 seconds. Within 5 seconds. So that means if you get a transaction as beneficiary PSP, and the timestamp is 4.9 seconds or something like that already when you receive it, and you know that you won't be able to process it within 5 seconds, you have to send a rejection. Right? So if you do your processing, and after that processing time, it exceeds 5 seconds, and again, 5 seconds from the timestamp the originator has authenticated the transaction, at that point, you have to reject the transaction. Okay? So, think about this. It's 5 seconds, including the processing time of TIPS, which is relatively fast, but also the time of the originator PSP as well as the beneficiary PSP. So when you're designing your systems, don't think 10 seconds. It's much, much faster than that you have to do that processing. Now, in practice, most of these payments are going through the pipelines in 1 to 2 seconds. So if we look at the statistics from most market infrastructures that I've worked with, the end-to-end flow, it takes 1 to 2 seconds. When it becomes more complicated is, again, when you start having payment initiation by files, and you have these high volumes that are kind of these high peak moments. At that point, you start to run into latency and timing issues. So beneficiary PSP, within 5 seconds, they have to confirm to that market infrastructure. The market infrastructure will wait until 7 seconds. Okay? So the market infrastructure waits until 7 seconds. After 7 seconds, if the market infrastructure hasn't received a confirmation from the beneficiary PSP, they will reject the transaction, and they will send a rejection both to the beneficiary PSP as well as to the originator PSP. So that's why we don't immediately credit the beneficiary, because if we credit the beneficiary at 4.9 seconds, and there's some delays in the network or something, and the market infrastructure only receives it at 7.1 seconds, well, the CSM has timed that transaction out and has rejected the transaction. Okay? So 5 seconds beneficiary PSP, 7 seconds the market infrastructure. The originator PSP should always receive the rejection from the market infrastructure within 9 seconds. So normally, when you do an instant payment and you send it to a market infrastructure, after 9 seconds, you should have received either a positive or a negative confirmation. Because again, at 10 seconds, you have to recredit or you have to lift the reservation. We have this settlement risk. So that's why the rule book, we say 10 seconds, but in reality, it's much faster than that. It's 5, 7, 9. Another thing to take into account, when we did our SEPA projects, we also did inquiries. Right? Payment status, where we could manually send an inquiry to a bank, asking them what's the status of this payment. Have any banks automated that process? No, probably not, right? Probably manually, probably manual message, perfectly fine. Not an issue for SEPA payments. Here, however, here we do have an issue, because potentially those 10 seconds have elapsed and you need to know what's the status, right? So you want to immediately send an inquiry message to the market infrastructure, and that market infrastructure should respond positively or negatively. They also need to respond instantly. So when it comes to inquiries, whereas with SEPA payments, you could do that manually, here, you should automate it. And certainly, if you run into these trends. So a very quick look at the flows, right? In the happy flow, originator PSP, they send a payment message to the beneficiary PSP, and then we get a payment status report back, right? So the CSM, if they reject it, they send a PAX2. They will also send a PAX2 that's positive if the transaction was successful. That PAX2 could also be coming from the beneficiary PSP. Right. This is the timing thing that we talked about, the 579 timeout deadline. That's the 9-second timestamp. Skipping over this, we talked about it already. So again, when it comes to investigations, as I said with SEPA, there we can do it manually. Here, potentially after these 10 seconds, we have a double booking that's happened, right? We have settlement risk. So you want to automate those investigations. The likelihood of this happening is very small. It's very, very small. But on the other side, it's potentially very high impact because it's a payment that's at 2 places at once, right? We can't have money being in 2 places at once. So this I would recommend to automate. So again, a recap. So I summarized the timings as receiving PSP. If the processing time and time of receipt is more than 7 seconds, you send a negative confirmation, right? The credit only happens based on the acknowledgement of your confirmation, not on the confirmation itself. And the 7-second timeout will override any positive confirmation. When it comes to exceptions, exceptions are the same as with SEPA payments, right? So we have recalls, cancellation requests. Here we have our CAMT 56, that's used for cancellations. We have both a positive and a negative response that's possible. It could be with a return payment, so a PAX 4, TIPS also supports the return payment. If we cannot do a positively respond to the recall, in that case we send a CAMT 29 back. Request for recall for originator, again, exactly the same thing as with SEPA. So I know some of the banks, it's different teams for international payments and for domestic payments. You know, talk to the international payments guys, they're familiar with this. It should be exactly the same thing. Again, investigations, this is where there's a difference. Whereas with SEPA, the investigations can be manual. With instant payments, this is where you want to automate that. And also you have the obligation, so as part of the rule book, you have the obligation to respond instantly. So here you should be able to verify the status of a transaction immediately. So that investigation message, it happens with a PAX 28. And that response could then come from the CSM or the beneficiary PSP, and will be in the form of a payment status report, so a PAX 2. All right, that was the dry part. Now let's talk about your projects. A lot of stuff. Yeah. Now's the time to wake up. I hope you all had your coffee, right? This is what impacts you. So, if we think about the impact of an instant payments project, it's much, much larger than the project for SEPA, okay? It's a different order of magnitude. It's a whole different beast. Instant payments are fundamentally different and much harder to process than any other type of payment due to their instant nature and...
Just to record.
They are recording it.
Sorry.
Hello. It's on record. It's very hard, right? It's a big transformation. So don't underestimate the complexity and the risk of this project. It impacts the entire bank. Not just, it's not an IT project, it is a project that impacts the entire bank. From IT to liquidity management to operations, reporting, financial crime compliance, everything is impacted. And I'm going to walk you through each of these different areas and the things that you need to consider. Right? What I really want you to get out of this today is many of you will be launching the project. Within your bank, you will be setting up a steering committee probably with a project sponsor, project manager. Well, what I want you to get out of this today is, okay, who are the different people that need to get involved in this project? Right? Treasury needs to be involved, compliance needs to be involved, and so on and so forth. So really get an understanding of everyone that will be impacted by this transformation. I'll give another second. You'll get the slides after the presentation as well, but I'm glad to see people are taking pictures and paying attention. So, first of all, 24/7 IT operations. This is something that's new. Right? Today, we don't have that. Since yesterday, we have until 8 o'clock, I believe. Congratulations, by the way. Already a nice shift, step in the... A small step, huh? A small step, but it's definitely a step in the right direction. So I think you will have experienced some of these challenges with 24/7 operations, right? Are you ready to receive transactions on weekends and on holidays? We had a client who did their infrastructure upgrades. They did it about every 2 months during Saturdays. So that means the entire Saturday, right? They weren't sending or receiving payments, so their whole infrastructure was unavailable on a Saturday every 2 months for firmware, hardware updates, all of this. And that was fine. But now with instant payments, you can't just say, oh, we're off for a day, right? Can't do that anymore. Are there any systems that are reliant on cutoff or downtime, specifically for batch-based processes? So what are these type of batch-based processes that you'll have often at the end of the day? These are things like interest calculations, right? You will go through all of the balances of your clients, all of the transactions to calculate interest for that day. For the banks that have international presence, you might have cash pooling as well, physical or notional cash pooling operations that you're doing, also end of day. Generating account statements, doing your regulatory reporting. A lot of these systems are kind of reliant on having a static database where no transactions are coming in or coming out. Now, you don't have that anymore. Right? Transactions are coming in and coming out at all times, which means that you have to rethink all of these processes. Also, if we think about reporting, for example, today many banks are generating their reporting, let's say at the end of the business day. So you'll generate your account statements for your corporate clients, let's say at 8 o'clock in the evening, because that's when you don't, that's when your last payment is. Well, now you get payments in until midnight. So we have to push that back. Right? And a lot of times these systems are in a certain sequence. So you're reliant on doing your cash pooling operations before you do your interest calculation. You're reliant on that interest calculation before doing your reporting, and so on and so forth. So it's a whole series of steps that a lot of banks are taking in their core banking systems that are kind of reliant on the static or at this downtime. Identify all of those processes, and you'll have to redesign each of those processes to be capable of dealing with a 24/7 environment. Right? So something that some banks have implemented is stand-in processing. What's stand-in processing? So typically you will have a customer ledger, right? A customer ledger is capable of keeping the balances of all your clients, getting transactions in, out, and so on and so forth. For some banks, it's incredibly difficult to make those client ledgers 24/7 available because it's a core banking upgrade. Right? You can't necessarily do that in, I think some banks are undergoing a core banking transformation project or have looked at it. Many of you know how big these projects are. It's not something that you get done in a year. So one solution that banks sometimes use is something called stand-in processing. So stand-in ledger is kind of a copy, a snapshot that you will take at the end of your day of the balances of each client. And then in the background, you can continue to run your operations and these things, processes that require static view, while the stand-in processor kind of gets the inbound and outbound transactions and processes it that way. Right? Many banks also use this, for example, for debit cards, where if you're using an issuing processor, they might also have the stand-in functionality so that, for example, if I'm using a debit card and the client's ledger isn't available, my issuer can then take decisions based on risk and these type of things. So some banks have looked at stand-in processing. Stand-in processing, it's maybe something that you can use certainly for inbound payments. For outbound payments, it gets a lot more risky, especially if you have multiple stand-in processes. Because what we want to avoid is if you have, let's say, 1,000 euros on your account, and I have a stand-in ledger for my debit cards, and I have a stand-in ledger for my instant payments, and they're two separate systems. What you want to avoid is that that client then, when stand-in is taking place, can then spend 1,000 euros on their debit card and do an instant payment for 1,000 euros. Believe me, clients figure this out quickly, right? I've worked with one client. They do stand-in processing for their debit cards as well. And every time they do stand-in processing, so they only do this once every 3 months for system upgrades. Every time they have clients that abuse the system and that know when this is going to take place and are able to basically defraud the banks for it. So this is really kind of a worst case scenario. If you can get your core banking to properly process it, this is the way to go. So I think that's also one of the huge differences with your SEPA projects. A lot of banks in their SEPA projects haven't necessarily done native ISO 20022 processing. Some of it's still basically MT103s and then kind of adapted using some type of gateway to use ISO messaging and things like that, right? It's kind of a stopgap solution, a tactical solution. Tactical solutions with instant payments are a lot more difficult and a lot more risky. So here we're really looking at a significant transformation. We also need to have appropriate but adequate incident detection and response measures in place. That means, well, today your IT support teams, they might not need to be available after business hours. Here, you might need IT support at 3 o'clock in the morning. For outsourced operations, review what service level agreements that you have. Right? When you're outsourcing your IT infrastructure or your core banking, think about your service level obligations with recovery time and recovery point obligations. Instant payments in Europe have caused a significant change in the way that banks have thought about their infrastructure and the way that they manage their infrastructure. And as we see it at Payloom, there's basically 5 different options of how you can manage your core banking infrastructure and how you can manage your payment infrastructure. If we start here all the way on the left, we're looking at on-premise, right? These are servers in your basement, and you're running your own hardware. So your core banking system is running in your own data centers. Some banks have shifted towards outsourced data centers. I think in Europe, probably the biggest provider of this is Kyndryl. So it's basically racks that you're renting in a data center of a third party, but it's still your machines that you're kind of renting from them, right? It's your separate things. A lot of banks have made the shift towards private cloud as well. So this is your own instance of, let's say, Azure. It could be your own instance of AWS. Some banks even have their very own clouds as well. And then we get to payments as a service. So payments as a service, it's really been starting to pick up with instant payments, and this is where your core banking vendor actually provides the infrastructure for you. And so it's not software that you're buying payments processing as a service. And there we have 2 variants of payments as a service. One is private tenant, so where within your provider's cloud you have your own network separation, your own little silo. Many smaller banks are even going for multi-tenant payment as a service, where there's logical data separation rather than network data separation. This is a little bit cheaper. So let's talk about why the shift is happening to the left. If you want to have your own data centers and have them be highly resilient and highly available, that's very expensive. Right? It's very expensive to have highly resilient data centers. But the advantage is that you have full control over your infrastructure and your data. Outsourced data center, it's a little bit of a hybrid. It's a little bit more cost effective sometimes, a little bit less control. Private cloud is highly scalable. And this is something that more modern payment engines are starting to look at as well, is to size that infrastructure in function of your needs. I mentioned transactions per second earlier. So if you go with something like that, well, obviously the transactions per second that you need on the 1st of the month at noon is going to be very different than the transactions per second you need at 3 o'clock in the morning. So when you're doing it on hardware, on metal, you always need to have that capacity for your highest peaks. Whereas if you're doing it with cloud-based solutions, you can scale your infrastructure throughout the day or throughout the month to be able to meet your payments need and sometimes have more cost-effective infrastructure as well. And then here, payments as a service. So this is where it's the core banking vendor that is basically providing that infrastructure for you. Well, the advantage there is that there's only, a single person to shoot if something goes wrong, right? It's your core banking vendor that's responsible for everything, whether that's software, whether that's hardware. The big advantage there is that it gives you some flexibility. Well, first of all, a single person to shoot. Second thing is You have a committed SLA and a single cost a lot of times as well, because they're typically the pricing model. It's a price per transaction or a monthly subscription or something like that. But it also integrates your infrastructure costs. So it's very clear from a pricing perspective. However, from an outsourcing perspective, right, it's another party that has your data as well. It can be a little bit more difficult in terms of governance and whatnot. So with the emergence of instant payments, many banks in Europe have shifted in this direction, right? Because we need that scalability, we need that high reliability, and that becomes very expensive, and only the largest banks are kind of on this side. Most of the smaller banks have kind of shifted in this direction. Right? Also, if we think about it financially, this is high CapEx, low OpEx. Here, high OpEx, low CapEx. So you want to think about your infrastructure. The one advice I can give if you are going towards cloud and payment processing in the cloud, think about what you put in the cloud and needs to be scalable, and what's actually better to do in your own data centers, in your own hardware. One mistake I've seen some banks do is have, for example, a lot of data, a lot of databases and things like that in the cloud. That's actually pretty expensive and doesn't need to be all that scalable. So just think about what actually needs to be scalable and what's cheaper to have in a less scalable setup. Any questions about this? All right. So obviously there's other legislation that's involved as well, like the EBA outsourcing guidelines, DORA, things like that. So I mean, there's a little bit of an oversimplistic view, but you know, we do see that general trend to be able to do this quickly and efficiently in this direction. Scalability is a big thing, right? And this is something that I think a lot of banks have learned the hard way as they've implemented instant payments. In the beginning, they just implemented it for single transactions and haven't necessarily thought about the future-proof way where kind of all transactions become instant after a while, and where scalability and throughput becomes very important. So what's important is that you figure out a payment through which systems it goes and start thinking about benchmarking those systems. What's the capabilities of each of those systems? Where are the bottlenecks? Right? And actually, a lot of times, it's your middleware that's the bottleneck. So it's not the systems themselves, but the pipes that are connecting your systems. Right? So MQ series oftentimes can also form bottlenecks in terms of capabilities and throughput. So really model out what your capabilities are per system and make sure that that is right for the type of transactions that you're having. Now, most of the banks in Montenegro are relatively small. Kind of a good baseline for a bank the size of yours, kind of basic for unitary transactions, you should be looking at around 50 transactions per second. The larger banks in Europe are now looking at 500 transactions per second. So take like an ING, KBC, these type of banks are aiming for 500 transactions per second. The largest banks, so take a Deutsche Bank, a JP Morgan, BNP, they're aiming for 5,000 transactions per second. Right? So that kind of gives you an idea of a benchmark. If you're only capable of doing a couple of transactions per second, then you have a problem. And you will end up rejecting transactions and have frustrated customers. So again, think about this in the early days of your project. You don't have to invest massively to be able to do 500 transactions per second at this time. But when you design your systems, make sure that you do it in a future-proof way that allows you to scale as that becomes more a requirement, and it will absolutely become a requirement when the instant payments regulation hits Montenegro as well, because there, again, payment initiation by file is included and no longer being able to surcharge. It's the perfect store. And of course, your end-to-end testing, right? Now with SEPA, you're doing unitary tests. Here you need to think about capacity testing and simulating those volumes as well. Right? So don't just do unitary tests, make sure that you're simulating volume through the end-to-end payment processing chain. Liquidity management, obviously very different than with SEPA or RTGS. TIPS will be connected to the RTGS, and you will be able to transfer liquidity to and from your RTGS account. Okay? So from your RTGS to your TIPS account, from TIPS to RTGS. However, you can only do that if the RTGS is open. That means you cannot fund or defund your account after the business day is over. So you need to think, how much liquidity do I actually need in the evening, right? Do you want to automate some of this? Do you want to automate some of those operations? We saw from the UDFS that there are specific messages that allow us to do liquidity transfers as well. Well, do we want to, based on our mirror accounts of our TIPS account, do we want to automatically do transfers between our RTGS and our TIPS account? If we think about Eurosystem, this is managed by Eurosystem for EU banks. Right, so here, Eurosystem Target 2 automatically allows you to do liquidity movement between your RTGS account and TIPS. But here, since the RTGS and TIPS are two different systems, we don't have that capability. So if you want to have some level of automation, then it looks like you'll probably have to implement that at bank level rather than at central bank level. So think about the level of automation that's possible and desirable. Forecasting is a big thing. Forecast how much liquidity you need. Think about how you're going to be able to forecast that. And it's very hard because it's a new service, so you don't know exactly what that's like. I'd say estimate it a little bit larger than you need to. I don't know if the central bank has already considered how, if the funds in the TIPS account are going to be remunerated or not. Do you know by any chance? We'll let you know. But yeah, we'll have to see how and when interest is paid out on instant payments account. And how frequently and when will you reconcile your balances? Right? If you have an RTGS account or a Nostro account, you do that reconciliation. How often are you going to do that, and when are you going to do that? Again, taking into account that you don't have a static point. It's always evolving. This is also one of the areas where I think it might be worth discussing with the central bank, and I think the central bank would be keen on getting your views on this as well. With the new instant payments regulation, there is no longer a limit on the value for instant payments. There's no longer a limit. So in the EU, we started with 15,000 euros.
With 50?
15, 1-5.
15.
It started with 15 originally. And then after a few years, it went up to 100,000 euros. And then now it's basically uncapped, right? Now, what's the impact of these higher amounts? Well, first of all, your liquidity impact is a lot bigger, because this doesn't only have an impact on your operations, right? Yeah, but I'm not making any claims, right? But I mean, these operations, they have an impact on your finances as well. Payments that leave the bank, it lowers your liquidity buffer, so you have to maintain your liquidity coverage ratio, all of these type of things. So in your projects, involve ALM, asset and liability management, quite quickly in this project to make sure that they understand what's coming about. I think it's also important to think about the transaction amounts and to have that discussion with the central bank. Again, this would be probably not managed centrally, but where, within this closed user group, we could say we reject transactions above a certain amount. You can make that part of your business rules, right? So that's not part of the EPC. This would be a deviation from the EPC rulebook. The other advantage I see when it comes to limiting the amount, it's baby steps, right? I think we're new to real-time payments. We're new to the fraud that's associated to that. And obviously having uncapped amounts can lead to higher impact for fraudulent transactions as well. So by initially somewhat limiting those transaction amounts, we can mitigate not only the liquidity impact, but the fraud impact as well. So it is something to start thinking about, and there will be a follow-up questionnaire as well. I'd be very keen to get your thoughts and your advice on what you think would be an appropriate limit. I think 1,000 is, my personal view is that 1,000 is on the low side, but nice try. But it's something to think about, right? Do we want to, as a market, go in a certain direction with that. Any questions about liquidity management? So this is also something new, you know, operationally. Your IT teams might be used to being on call in weekends for worst case scenarios. Your liquidity management teams certainly are, right? So this might even have an HR impact, things like that, when you need to think about the availability of these type of people. Reporting. So when are your starting and closing balances calculated for your clients? When is that done today? Does that need to shift? Are you capable of generating client reporting in the weekend? I think today we're already looking at, with online clearing, doing weekend processing. I think that's in October of this year, if I'm not mistaken. Right, so that also has an impact. You need to start talking to your corporate clients today about that. You need to communicate to your corporates. Your telco clients are not used to having their invoices paid on a Saturday or on a Sunday. They're used to receiving an account statement on Monday. Now, potentially they receive an account statement on Saturday or Sunday. They could maybe wait till Monday to process them, but it's not something that they're used to today, right? So this has an impact on corporate treasurers and their processes as well. And if you come to them 1 month before this changes, if you come to them in you know, only in October and say, hey, you're now receiving transactions in the weekend, they're not going to be thrilled about that either. So you talk to your corporate clients. Client notifications. What new client notifications are required and desired? So on payer side, we have that obligation to inform the client whether the transaction was successful or not. On beneficiary side, on receiver side, there we don't have that obligation, but it's still something very nice to have. For example, with my bank, I always get a notification when I receive an inbound payment. It's always nice to know, well, now I pay my own salary, so it's no longer the case. But when I was an employee still, it was nice to know, hey, payday, right? And definitely when it comes to reporting as well, your online channels need to reflect the accurate and timely balances. I had another client, a private bank, where the balances that were shown in the banking application, it was a separate database that was only fed once every so often, once every couple of hours. So the balances weren't really up to date. Well, here we want those balances to be up to date, right? Because what's the worst thing that can happen, or what's incredibly challenging as a community, is, let's say I've done a payment. My bank says, yes, the payment was successful. And Sasha was the beneficiary of that payment. And then Sasha looks in his online banking app, and the money isn't there because his reporting isn't up to date. Now, we both panic. We call our banks up, right? It's a Saturday, and you have this big operational impact. So making sure that you have accurate, up-to-date balances is important. So think about where your balances are being retrieved by your channels. Is that really online, or is it a duplicate database somewhere? Yeah. What you'll see as well is that with instant payments, typically clients check their balance more often as well. So there's potentially an impact as well, right? You're not used to your clients checking their balances and things like that over the weekend or in the evening. Now with instant payments, people check their balances more often. Surprising. It was one of the banks I was working with, so retail bank, their average clients check their balance 400 times a year. So to give you an idea. Reconciliation. When do you perform your reconciliation? Oh, sorry, I'm clicking things by accident. We talked about that. Reporting, yeah, reconciliation. How will you manage that on non-business days? Do you have reconciliation teams today that are capable of reconciling your clearing account? Will they be available in the weekends? Again, HR impact. And how will discrepancies between your mirror account, so actually here it would be a Nostro account, but your clearing account, well, if that's on a non-business day, how will that be dealt with? And again, do you have that capacity to see it? Customer interaction. Will customer service be available outside of business hours? What makes sense for your bank? Right? And again, this is where transaction amounts have an impact as well. If I do a payment for 50 euros and it hasn't arrived at the beneficiary, it's frustrating, but I can deal with it. If it's a transaction for 50,000 euros that's disappeared on a weekend, I want answers quickly, right? So what level of support is reasonable and proportionate to your bank? Also, we need to think about a communication strategy around instant payments. The benefits of instant payments, right? The benefits of Tipsklone, I think there's already been some communication about that. But also, what are the risks? We saw that instant payment has much higher fraud risk than regular payment, so clients need to be aware of that as well, right? Are there any legal and contractual terms that will need to be modified in order to comply with the regulation or to be able to implement instant payments? We'll talk about it at the end today with IBAN, but obviously today we have clients that have a cross-border account and a domestic account. If those two merge towards a single account potentially, what does that mean in terms of our contractual setup with our clients, our legal obligations, and so on and so forth? Any questions about this? You guys starting to see the scale of the project? Fraud prevention. So what's the big risk with instant payments? Big risk with instant payments is that the account hits, the money hits the beneficiary account immediately. So if you're defrauded, that money hits the fraudster's account immediately and they can withdraw it in an ATM or, the money's gone. The money's gone. Whereas with a regular payment or a SEPA payment, it typically takes a day or, a few hours. So, maybe your parents, they got a call, it was a little bit suspicious. They call their kids up and say, and we might be able to recall it. With instant payments, that's not the case. What do we see? Depending on the different data sources and that you're looking at, the reports are typically between 7 and 11 times higher fraud rates on instant payments than with slower payments. So that's a 700 up to 1100% increase of your fraud rates. That's enormous, right? So there's a couple of things that we can do. The first one that's now being implemented across the EU is verification of pay. This is something else that I would consider looking at the market, and that we'll ask in the questionnaire as well. Well, we can't be part of the European verification of pay as of yet. However, much like we can't be a direct participant of TIPS in the EU, we can have a local copy of verification of pay. Would it be desirable to implement verification of pay locally? Is that something that we would want to do? Again, this can have a significant impact on the reduction of fraud, not necessarily on the number of fraud cases, but certainly when it comes to the higher value fraud cases. Right? Invoice fraud, CEO fraud, these type of things can be avoided using verification of pay. It's an additional workload. It's again another project, but there's a very close link to instant payments and protecting your clients. If you think about fraud prevention, you should, in your instant payments project, make sure that you have some type of fraud prevention solution, right? So some banks today don't yet have fraud prevention solutions. You should have a fraud prevention solution. What should that fraud prevention solution look at? Well, they should be looking at 4 different things. They're looking at the customer, the channel, the payment, and potentially market data. What does that mean? Your customer. You have a KYC about the customer. You know what type of customer it is, right? A retail client, an individual, is going to have a very different profile when it comes to receiving transactions than a telco, right? If a telco receives 1,000 payments in a day, that's perfectly normal. A retail client should be receiving 1,000 payments in a day, right? Same thing with outbound payments. If you have a private banking client, a very wealthy client, then maybe a transaction of 10,000 euros is just another Thursday. But if your client is, a sailor or whatever it might be, or someone that doesn't have that type of income, and you see a high value transaction, again, that's more suspicious when it comes to fraud. Right? We want to think about the channel as well. How is this transaction initiated? Typically, the client always uses the mobile application, and all of a sudden they're doing a payment towards a new beneficiary, and they're doing that from their online banking. And on top of that, well, the IP address is somewhere in India. That's suspicious, again, even though if the transaction on its own isn't that suspicious, right? So we need to look at the combination of the customer, the channel that they're doing, and the payment. And again, it should be looking not at individual payments, but at a series of payments. If I'm an individual and I receive a single payment from another individual of 10 euros, 20 euros, 30 euros, whatever it might be, that's not suspicious. If I receive 10 payments from other individuals for those amounts, even that, I mean, we went out to dinner with some friends, they're reimbursing me, that's perfectly fine. But if I get 100 payments from other individuals, that starts to become suspicious. And then finally, we can think about market data. Now, today in Montenegro, we don't have that yet. It can be also challenging from data privacy, bank secrecy concerns, but some initiatives that I've seen in other countries are, for example, databases of mule accounts and the identities of money mules, that type of sharing. It's also a value-added service that you could add on top of your instant payments market infrastructure, is to try to detect fraudulent transactions or suspicious transactions. This is also something that EBA offers, for example. So EBA with their instant payments platform, RT1, as well as with Step 2 for SEPA payments, they have FPAD, fraud prevention and anomaly detection. So your correspondents have access to that as well, right? It allows them to get kind of a risk score for each transaction that's calculated centrally across the market. This is difficult for smaller banks. It's often expensive to implement. It's expensive to maintain because when you have fraud hits, you have to investigate them. And you have to maintain and update your rules at all times. Some banks or some solution providers have started to use artificial intelligence to automate some of this and to make that operational cost a little bit lower. Right? But again, you really should be thinking about fraud prevention solutions. What have we also seen is that fraudsters figure out which are the weakest banks when it comes to fraud prevention. So what does that mean? If you don't invest in fraud prevention, your fraud rates will go up, not only because you're poor at detecting fraud, but because fraudulent clients will migrate towards your bank because they know that you're not detecting it. Right? So the impact gets amplified. Again, this is something that will have, if you don't have a fraud prevention solution yet, it will have budgetary impact, it will have IT impact, right? Make sure that you're capable of doing this. The other recommendation that, is this no, okay, so going back. The other recommendation that I have with fraud and also with sanctions and AML, with instant payments, again, there's a process straight through or they're rejected, right? So we don't have time to manually investigate fraudulent transactions. So that means if you have a fraud hit, you reject the transaction, too late. However, what is best practice? The best practice is to then review at the end of the day all of those hits you had and to create whitelists. This morning I gave the example of the consultant I couldn't pay using an instant payment because it looked like a fraudulent transaction. Right? My bank investigated that fraud hit and they saw, okay, no, this is fine. They actually called me up and asked me, is this a normal transaction? I said yes. And now I can pay him using instant payments because he's been added to a whitelist. Right? Same thing with sanctions and things like that. So even though for a transaction individually it's too late, again, these relationships between payers and payees, they're often recurring. Right? They're business relationships or family relationships or something like that, and that often is more than one single payment, the recurring payment. So even if that first payment fails, set up the system so that you can do payments the next time. Any questions about fraud prevention? Yeah.
Is real-time scoring the only adequate solution for fraud and AML?
Yeah, real-time is basically the only. I mean, unless you have an army of people who are sitting there behind a computer with a lot of caffeine to manually review transactions. But fraud, again, it's in real time, right? The money hits the beneficiary account immediately, and it's gone. The fraudsters, they're waiting in an ATM with a card to withdraw the money, and then it's out of the banking system. So unlike with SEPA payments where or with non-real-time payments, you have a little bit more time here. It's basically real-time.
Any tips and tricks for tools for real-time scoring?
I can have a look at some of the tools that are available, but a lot of these, and again, a lot of them are also offering it as a service. So rather than a software package where it's an API that you can call with various data points, right? But again, try to think about all the different data sources that you have that you need to connect into. Think about where your customer databases are, what your channels are, what type of payments you're doing, so you can find an adequate solution. A lot of times your KYC solution providers also offer these type of fraud prevention tools, so that might be a good starting point because it's often they're integrated. Yeah, you had a question as well?
Maybe if you have this information in the EU, what's the regular percentage of rejects for this reason? You know, ballpark figure?
There's a big difference between domestic and cross-border. So cross-border, the reject rate was at 11%. Most of it wasn't fraud-related, but sanctions-related. Now, in EU, the sanctions approach is different. Actually, we don't do sanction screening on instant payments. So as of January of this year, banks in Europe are not allowed to do sanction screening on instant payments that are within the EEA. And actually, each bank is responsible for their leg of the transaction. So let's say, CKB is doing a transaction to NLB. If your client was under sanctions, then you'd be sanctioned, but NLB wouldn't be sanctioned for that transaction. Or the other way around, if NLB client was sanctioned and they did a transaction to CKB, you wouldn't be fined, it'd only be NLB because you're part of the same regulator. Right? So with instant payments in Europe, we said, we had these sanctions hits, and that's why with false positives we get high reject rates. So we're not doing that anymore. It's only for instant payments, not for SEPA payments. Why is that? Because lists evolve. And a SEPA payment, let's say over Easter weekend, can take up to 5 days, right? Because it's for non-banking days. And that list can change between the time it was sent and it was received. Whereas with instant payment, the risk of that happening within those 10 seconds is very small. So typically, either whitelists, that's one approach. The other thing is that a lot of these tools are using machine learning and AI. So you have to give feedback of, was this actually a hit? Or was this a true fraudulent transaction, yes or no? So that your machine learning can then improve their algorithms. But following that up is key, right? And I think this is something to pay attention to. Your effectiveness of the fraud is actually more linked to the fraud teams that are managing this and following this up, even more than the technology. I've seen some great outsourced service providers who do this fraud detection, including the client follow-up as a service. We have great technology, poor client follow-up, and it doesn't work. So take that into account as well. Yeah. Other questions?
You are not doing sanction screening per transaction, but the banks have the obligation to do daily transaction.
Yeah. So every day they have to review all of their clients on a KYC level, and also immediately after lists are updated. So that's another challenge, right? Because interestingly, the EU, they only publish these lists as kind of PDF files. So kind of doing that immediately is very hard because it's unstructured data and you can only get your list later and so on and so forth. But yeah, basically that's the approach that's taken only for sanctions. Now, when it comes to sanction screening in Montenegro, I don't know if today you apply sanction screening for domestic transactions. No, yes? No?
Depends from bank to bank. Some banks are stopping even domestic transactions for very literal reasons.
Yeah.
Some number, some code, some missing, typo missing or something like that. Depends from bank to bank.
Exactly. Well, and it also depends on where you're regulated, right? So some banks might be, so you might not apply domestic sanctions lists. So if we think about, so the approach to sanctions in Europe, How it's done there is we no longer apply sanction screening at EU level. However, most banks also apply OFAC screening. Right? That's not part of the EU regulation, and you can and still should do OFAC screening. Right? So that's an example. If you have domestic lists, you'd still screen against those domestic lists. The one attention point that you have, so think about a Venn diagram, like the MasterCard logo, right? You have entities that are on both the EU lists and OFAC lists. Where you have that overlap, typically you would exclude those from screening as well. But again, that's not, that's instant payments regulation, that's not TIPS clone. And you would still typically apply, or receiving banks, if you are doing the EU instant payments, they would still do sanction screening because Montenegro is not part of the EEA. We don't have that certainty that the European lists are being applied and so on and so forth. So banks in the EU would still do sanction screening against your clients. Right?
Sorry.
Yeah.
In case of fraud, who is responsible for the damage compensation? Is it bank automatically, and which bank? Or the client should initiate some procedure for a refund?
So I don't know for Montenegro. That's, you know, good. Yeah. Yeah, with instant payments, there's no discussion about fraud except for when it comes to verification of pay, and that fraud could have been avoided with verification of pay. When it comes to the reimbursement of clients, that's something that's currently being reviewed. So in Europe, we're currently working on PSD3, and this is kind of the balancing act that they need to make. Essentially, there are 4 parties involved in fraud, typically. We have the payer, so the person who has been defrauded, who need to have some form of responsibility as well. We have the payer's bank, who needs to protect their payer. And we have the beneficiary bank, because they're the one that are banking the fraudster and should be able to detect these mule accounts and whatnot as well. So those are the 3 players kind of in the banking ecosystem, the scheme participants that we'll find here. And then the other discussion that you have in Europe currently is, well, how was that fraud originally initiated? Oftentimes that's via telco or that's via social media. So what's the responsibility of these telcos and social media platforms? That's still an ongoing discussion as well. So right now with PSD3, we're trying to find that balance. What is the right balance between responsibility between the payer's bank, and the beneficiary bank? Because we have to, at one side, protect clients, but on the other side, you know, clients, you get an investment scam, right? Like an advertisement, 10 million % return on this investment. Client can say, hey, why not? I'll do it anyways. If it's fraudulent, my bank reimburses me, so the only upside, right? That's what we call moral hazard. So yeah, when I talked to Du Colombier, he was on the European Commission working on this legislation. That was still kind of the last point of PSD3 that they're trying to finalize is how do we set that balance right? But it's a very difficult question. I think, yeah, last thing I'll come back to you in just a second. In the UK, for example, they went too far. In the UK, they said, you know, it's the banks purely that reimburse it, split between the payer's bank and the receiver's bank. The payer never has to pay anything. They actually rolled that back and set limits now. Yeah. So a question back here somewhere?
Yeah, a little bit out of order question. But, so we're talking here about rejects because of some legal issues with clients' data, etc. But what is the let's say expected and what is allowed percentage of rejected messages because of these technical timeouts over these 7 or 10 seconds, etc. I'm sure that the central bank or other regulator would not like to have 50% of transactions that drop because of that. So what's our threshold there and what to expect there? What's the good practice in the EU?
So today there's no specific number. There is now reporting to the national competent authorities that comes into effect as of 2026. It's the Euro Banking Authority that's going to collect that data. So within the EU, you now have regulatory reporting where you have to communicate how many transactions timed out, how many failed, how many fraud hits you had, and so on and so forth. What they're going to do with that data, that's still up in the clouds, right? Yeah.
So for now, this is just a nice-to-have service, and there is no obligation of the bank I mean, yeah, it is obligation to provide it, but not with any threshold, any expected outcome. So if the transaction doesn't pass, they don't do right now anything with it. Maybe just redirect it to SEPA or regular payment. That's it.
Yeah, I mean, redirect to SEPA automatically, that again, I wouldn't advise. Remember the bicycle case, and again, it's not in line, it's actually not in line with the EPC rulebook, the new version of the EPC rulebook either. That being said, on one side you have regulation, on the other side you have client experience. If you're constantly rejecting transactions for your payers, your clients get frustrated. It also has a financial impact because potentially you lose customers, but also those customers then call the bank and say, hey, why was my transaction rejected? And so a rejected transaction is actually quite expensive because of the customer service cost that's associated to that. And certainly on the receiving side, if you have corporate customers, you know, if a client tries to pay their telco bill and their transaction gets rejected and they say, oh, screw it, I'll pay it some other time. Well, your corporate customer gets very frustrated if that becomes a regular occurrence as well, right? So it's not just a regulatory thing, it's also a competition perspective that, you know, having good fraud prevention solutions, but that don't have, you know, you shouldn't be rejecting 20% of your transactions, right? And I think it really depends market by market as well, where, you know, a lot of the rejects that were happening in the past were related to sanctions hits. So for example, if you're in a market that has a lot of Russian-speaking people, where you have a lot of names that are Russian and similar to some of the names that are on the sanctions lists, then you're automatically going to have higher reject rates than a country where that's not the case. Right, so there's some country specifics to it as well. Again, when it comes to sanction screening and AML, there will be some guidance from the central bank, specifically also about AML. I think that's the next slide. Yeah, AML. How are you doing AML checks today? Are you only doing that post hoc, or are you doing them in real time? Again, if you're doing them in real time, we potentially have timeouts and things like that. Yeah, so some banks use investigations account where they credit an investigation account. So they say the transaction is successful and they credit an investigation account. Others reject. I think that's where the central bank will need to provide some specific guidance on TIPS clone and the specific AML guidance regarding instant payment transactions. Last two parts of today, we'll do a quick deep dive on connectivity. So what the connectivity solutions are to TIPS clone. And then we'll finish with a discussion on IBAN. So thank you as well for the feedback that you gave on the IBAN questionnaire. And kind of based on that, have a little bit of a discussion. But first, connectivity. When connecting to TIPS clone, we can connect in two ways, U2A and A2A. And typically we'll use both of them, right? U2A is user to application. So this is when it is a user that is interacting with TIPS clone. A2A is when it's an application that's interacting with TIPS clone. Now, this is from the perspective of TIPS clone. So U2A is basically you're going through a browser to access TIPS clone, right? A2A means that is being sent as a file, as an XML file to TIPS clone. Now, what you can have is, let's say you have a service bureau or something like that. That service bureau might have user interfaces. So this isn't the user interface of TIPS clone. That would still fall under A2A, right? Because your service bureau, your core banking user interface is generating a message and sending that in A2A. So two types of connectivity. There are two network service providers to connect to TIPS clone, Swift and Nexi. So Nexi actually used to be SIA Colt, which was then acquired by Nexi, so now called Nexi. So if you go through old documentation, you should see any references to SIA Colt, that's now Nexi. The two approaches are a little bit different, and each bank can decide individually which approach that they want to take. Do they want to take the Swift route, or do they want to take the Nexi route? Nexi, the approach is somewhat different, and we're still in discussions with them, but it seems like that they would prefer the central bank to operate a hub. So if we go the Nexi route, right? Banks would connect to the central bank, and then the central bank forwards that traffic on to TIPS. So where the central bank is acting as a hub. With SWIFT, that's a little bit different. With SWIFT, you can connect directly over SWIFT. So in this case, you need something called AGI, Alliance Gateway Instant, AGI. And AGI allows you to send instant payments over the SWIFT network. Oh, too fast. There we go. AGI is pretty expensive. It's not all that easy to deploy, not all that easy to manage. It's expensive, you need lease lines, all of these type of things, right? So that's why many, many banks don't have their own AGI, but go through a service bureau. That service bureau, I understand in the Montenegrin market, it was mainly CIS. That's one of the large service bureaus that many of the banks are operating with. They are looking currently at providing that connectivity as well. But it doesn't have to be CIS. It can be any service bureau. Right? Finastra has one, EastNet has one, IBM, Accenture, all these companies have service bureaus as well. Right? So where you can find the service bureaus is actually on the SWIFT website. If you search for the Shared Infrastructure Program, SIP, then you will have a service bureau directory which lists all of the service bureaus. You can filter per region as well. You can filter by the European one. So if you're not happy with the offer from CIS, you're not happy with the offer from Nexi, you're not happy with the offer from SWIFT, you can look at any of these service bureaus, okay? Now, part of the SIP program is audit, right? So SWIFT actually has a team of auditors that will audit all of these service bureaus. So what does that mean? That means any one of the service bureaus that are kind of listed in this directory, they're cyber secure. So that means you don't have to go extremely far in your cybersecurity due diligence. Of course, the way that you connect to the service bureau, make sure that that's secure, also on your endpoint. But the service bureau itself, you can consider it as being cyber secure, and that is audited by SWIFT in the Shared Infrastructure Program. So, connectivity. Nexi, hub and spoke, still in discussions with Nexi what that would look like. That would be the central bank that's providing that. The alternative is to go through a service bureau or through SWIFT. Also, we've had some discussions with SWIFT and with CIS to try to find some proposals. Now, what we have to figure out as well with Nexi is that if the central bank is going to operate as hub, there has to be sufficient volume to justify that. So if we already have an early indication of whether you want to go the service bureau route, the SWIFT route, or the Nexi route, that allows us to also assess what would make sense for the central bank, right? Service bureau, it could also be an internal hub. So this is also one of the discussions that we could have. Some of the banks also do kind of a centralized SWIFT infrastructure, right? I think so some banks are operating that. Some of them are also doing centralized sanctions monitoring, things like that, where you might be able to leverage that connectivity. If your central hub is capable of connecting to TIPS at the ECB, they are capable of connecting here as well. So for the banks with European branches, that might be a relevant approach as well. So
Just to clarify that, but they will need to do the project, these parent banks, or whoever is already connected to TIPS, they will need to do the project with Bank of Italy for the TIPS clone connectivity.
Yeah, they would have some involvement to do that TIPS clone connectivity, indeed. But basically, they are a shared infrastructure provider as well, just in-house, if you will. Okay. So again, 3 options. AGI, the cheapest way that you can have AGI directly is through Alliance Cloud, which is kind of the equivalent to Alliance Access, but hosted by SWIFT. But again, I think probably your best bet would be to go through a service bureau, typically the most cost-effective. SIP we talked about. What are the things that you need to consider when you're looking at your connectivity options? So let's walk through it. The first part that we can look at is U2A connectivity. how is that U2A connectivity implemented? So basically U2A, it's through your browser that you're going to connect, right? But the service bureau or the network provider is still involved because you need a certificate to be able to connect to TIPS clone. And those keys are stored somewhere. Sometimes that can be stored on an HSM, a hardware security module. Sometimes that can be a USB token. Sometimes it's a PKI infrastructure that's hosted for you by a service bureau. So figure out how your service bureau is going to, or how your provider is going to manage that U2A connectivity, and make sure that that is appropriate and that it works for your bank. What's the one issue I've seen a lot is if you are using virtualization rather than thick clients. So for example, if you're using Citrix or things like that rather than actual physical desktops, or you have hardening, for example, that the USB ports on your laptops and computers don't work, and that you have a USB token, you run into some issues there as well. So figure out from your perspective, right, what are the hardware and software requirements, and is that compatible with your cybersecurity practices at your bank? Because basically we want to be cost effective in our connectivity. And cost effectiveness, it's not only what we're going to pay to our service provider, but it's also what are the costs for us going to be to make changes to our cybersecurity infrastructure, to our practices, and so on and so forth. A2A connectivity, there again, we want to look at what are the hardware and software requirements. That could be specific types of servers that you need. It could be HSM modules that you might need. An HSM, for starters, is incredibly expensive, so that's something that you probably want to avoid. Figure out whether it's compatible with your IT environment. You know, are you more Linux-based? Are you more Windows-based? What are the requirements, and is that appropriate for you? Secondly, we're going to look at the integration layer. So what is the preferred communication method that you would have with TIPS clone? That could be using API, so that could be either REST or SOAP or webhooks or things like that, so various types of APIs. A lot of service bureaus, and I think Nexi as well, is also using MQ series. What's the difference, without getting too technical? API is stateless, so it's just a one-off connectivity, right? Whereas MQ series, there you have some buffering capabilities. So often MQ series will be a little bit more expensive and more challenging to implement, but it does give you an additional layer of resilience and buffering and yeah, things like that, right? And then SFTP. SFTP we typically wouldn't use for payments themselves. We would use SFTP for the non-real-time communication. So remember, from TIPS clone, you'll also receive account statements, things like that, right? Investigations, messages, all those type of things that you can look at doing SFTP. And I think the general practice and what TIPS is looking at as well is basically the real-time stuff is MQ or API-based. Actually, from TIPS, it's all MQ, but it's the integration layer that can then translate that to API. And then SFTP or Swift File Act can be used for statements and things like that. What else are we looking at? What are the warehousing and audit capabilities? Do we have a clear audit trail of what we sent, what we received? Is our service provider taking care of that? Or do we have to manage our own warehousing capabilities? And we want to balance a couple of things. The ease of integration. How well does it integrate into our current core banking systems? How secure is that? And what is the level of resilience that is provided by that integration method? And then finally, impact on audit. If you're going the service bureau route, Swift, so Swift also has the customer security program, Swift CSP. You'll be audited on a yearly basis. You already are today for your CSP. If you go the Swift route, that would be part of your Swift perimeter. So it would have an impact on your CSP audit. So I would advise, as you're doing this, and if you're considering the Swift or the service bureau route, you know, talk to whichever teams that are involved in cybersecurity or in your CSP audit to make sure that they know it up front and that they don't get surprised at the end of next year that there's, you know, all these new things that they didn't know about, and potentially, you know, there might be some gaps against CSP, so that you design it in a correct way. Service and resilience. So what are the service levels in terms of availability? So again, the higher that availability is, the more expensive it gets. Right? So, you know, typically I'd say you want to go at least for 99.9% availability. More you add nines to that, it gets astronomically expensive very quickly. So think about it in terms of recovery time objective and recovery point objective. So that's data loss and how quickly that you can get it. I think these are standard practices when it comes to IT outsourcing. Your cybersecurity or your procurement people should understand these terms. Also, if there are incidents, what is the incident management going to look like for your service providers? And there we can look at when can you expect to receive a first response, and when can you expect the issue to be resolved. We'll also see that those response times will be in function of the criticality of the incident, right? A critical incident that, for example, you're completely disconnected from TIPS clone, critical incident, you would expect that to be resolved within 2 hours. Non-critical, or you can potentially take a little bit longer. So what are the various service channels? Is it only a portal? Is it via email? Is there a phone number that you can call? Right? What are the various channels that you can reach them in? And potentially to consider as well, what are the languages that the service bureau or the service provider can support you with? And then finally, what's the level of onboarding and testing support that they will provide to you? Right? Other items? This is critical. Some of these service bureaus can be smaller players. How's their financial standing? Are you sure that they are going to be solvable, that they are resilient economically? Because if they go bankrupt, you have a problem as well, right? So you want to do a level of due diligence there as well. Corporate social responsibility might be something that you want to look at as well. What are the legal terms? What's the contract that they're proposing? And what is that contract duration? A lot of times you will get discounts if you have a longer contract duration, but where you're stuck with them. If that contract duration is shorter, you typically pay a little bit more. How do they handle liability in terms of downtime, things like this? Okay. If we're looking at the financials, regarding connectivity solutions, there's a couple of baskets that we can look at. The first basket are onboarding and one-off costs. So most of these service providers will charge you an onboarding fee or a one-off fee to get you integrated into the system. Next to that, there will be monthly or yearly recurring costs. So these are not individual messaging costs, but they are recurring costs. And those recurring costs, they can be in function of the bandwidth that you require. If you anticipate that you'll send more transactions, well, you'll pay more per you'll pay for those transactions. But also, for example, the leased lines that you might require, the capacity of those leased lines that you need vis-a-vis TIPS clone is going to be different in function of the volumes that you anticipate sending, right? So whether you use the capacity or not, that's going to have an impact. We also have a cost per message. I believe that cost per message is 0.05 cents for both, or even less. 3.05 cents. So I mean, it's not going to break the bank. That's not the big thing. So I think, you know, seeing the volumes of the Montenegrin market, the first two are probably the ones to pay most attention to. And then finally, don't just stare blindly at the financial proposal of your service provider and compare those two, but look at what the costs are going to be to do that integration. Right? So potentially you'll work together with the systems integrator to do that. You'll have to do that systems integration yourself. You have to make adaptations to your systems. That can be a significant driver of cost as well. So make sure that you consider that into this as well. So when it comes to connectivity, kind of those are the things that you can consider. If you take those last couple of slides and you want to send an RFP, for example, to potential solution providers, those are typically the baskets that you would be looking at. And the central bank will also continue to communicate as our insights progress into the various service providers. Again, it's completely up to you. So each bank individually can decide whether you want to go the Nexi route, whether you want to go the SWIFT route, and if you go the SWIFT route directly through a service bureau, which service bureau, that choice is entirely up to you, what makes sense for your own bank, right? But again, where we'll be asking you about your initial thoughts about that, again, if the central bank is going to be acting as a hub for some of the markets, we need to have the volume to justify that. So if you already know, we have a center in Austria or in Hungary or wherever it might be, and we're going to go that route, and we know that the central bank isn't getting those volumes, in that case, it might not make sense to go the hub and spoke route. Any questions about connectivity? During the lunch breaks, it seemed to be the hot topic. Any other questions about connectivity still? I hope that provided a little bit of clarity. So the last thing that I want to talk to you about is IBAN. So thank you for the responses to the questionnaires. During the kickoff meeting, I had made a recommendation to the central bank to go with an approach where we'd have a transitory phase where we'd still have this dual account system of a cross-border account and a domestic account, both having an IBAN, and then in the long run going towards a single consolidated IBAN. Now, based on the responses of the questionnaire, I've come to the realization that that will likely be very difficult to implement. Why is that? Because most banks today, when it comes to their cross-border account, use the same account number as their domestic account. It's just an IBANized version of their domestic account number. So having this system of dual accounts would actually be quite technically difficult to implement. Now it seems that there is overall a willingness in the market to go towards a single account system, but we have to think about how we can phase that approach, right? How we can transition towards a single account system that potentially has some regulatory impact as well. So we have to, have some more detailed workshops about exactly how we're going to implement IBAN. Finally, I think it brings us much closer towards European standards as well to have a single IBAN both for domestic and cross-border payments. There's also a lot of customer communication that needs to happen as we transition to IBAN. Clients need to understand what the benefits are of IBAN, and they need to start introducing that into their practices. So clients need to send invoices with IBANs on it, right? Clients need to know what their IBAN numbers are and start using them. So there's a lot of a big transition phase that we have to go through as well. Typically, this is why the best idea is to go from an IBAN that's calculated based on the BBAN. Clients know their BBAN, right, their domestic account number. And if you have a simple algorithm that can translate that to IBAN, you can continue to allow your clients to use BBAN, even if in practice, in the back end, it's an IBAN, right? But if we do that today with a dual account system, well, if you take your domestic BBAN, your domestic account number, you translate it to IBAN, well, you get the IBAN number of the cross-border account. So that's why this original transitory phase that I'd proposed is actually probably going to be a difficult approach. So we need to review this and figure out how we can get to a single consolidated IBAN, figure out kind of in what timelines. So crunching the numbers and crunching the data that's been provided from the questionnaire. So more information about that soon, and I would recommend that we organize some workshops to brainstorm this together. Potentially also, we see that there's a significant consolidation of service providers or of core banking systems in the market here. Having those core banking systems around the table for those discussions would be beneficial as well. So more information to follow about IBAN, but I think this is one of the particularities for Montenegro as well, is that you've got this dual account system that we need to migrate towards IBAN, and this is very much on the critical path. So this is something that we need to move forward with quickly. I think that was it. Yeah, that was my last slide. So that leaves some time for Q&A still. Do you still have any questions? Does this help you structure your project and think about everything that we need to do as we move forward? I hope no panic reactions yet. Or maybe a little bit of panic, but
maybe a bit more.
a bit more panic? Yeah. A little bit of panic is healthy. Anyways, you have my contact details up here. You know, I'm of course available to continue to support you throughout this. But I think in these early phases, the most important things is really to get a clear view of all the stakeholders that are involved. It's not just an IT project, it has impact on operations, it's got impact on HR, it's got impact on your liquidity management, and don't wait until the last minute to get them involved. Get all of the stakeholders around the table as quickly as possible so they know what's heading at them, and that you can start to figure out what the budgetary impact is going to be for next year. Any last questions? All right. In that case, I'll give you back 20 minutes of your time. Thank you so much for coming here. I know it's a very busy period. Good luck with your SEPA testing. Congratulations on your extended clearing hours already. And again, very happy to answer any questions.